Imagine sunbathing under the sun on a beach in Thailand, or sipping fresh coconut juice while on your laptop at a cafe in Bali. This is probably the life that we all want. No more 9 to 5 job, and we can do whatever we want. I'm telling you, this can actually happen to you if you study and invest in dividends. Hey everyone, Capital Finance here. In the United States, about 40% of people can't even last a month on savings. As a result, over half of all Americans are merely making ends meet. That's why having an investment portfolio is essential to achieving financial freedom. There are many types of investment, such as real estate and stock trading, but today we will talk about dividends. For the sake of context, let's use Warren Buffett as an example. He is the CEO of Berkshire Hathaway, a massive holdings company, and in 2021, he received a staggering $3 billion worth of dividends. And nope, he didn't sell his shares. To understand more about this, let's dive much deeper. Before we continue, make sure to hit that like button. According to many, rent is often regarded as the best kind of passive income. And it's hard to disagree with that because the value of properties continues to rise, and rental income is generally large enough to fulfill your needs and wants. Even in the worst case situation, there will always be a need for somewhere to live, even during the pandemic. When everyone expected the outbreak to negatively impact the value of homes, the exact reverse has occurred. Prices surged by over 33%. However, managing real estate is not as simple as many would think. If you've been in real estate for a long time, it takes a lot of work to keep your rental money coming in. What makes dividends so tempting is that dividends are essentially passive income. Often, you don't have to do anything after you find the right company to invest in. But what are dividends and how do they work? Because businesses evolve and develop into maturity, it takes time. It's necessary to put up money up front to cover the costs of hiring employees and paying rent. But once things get going and the firm starts producing cash, they split it with the owners. As a result, if the firm makes a profit, it must distribute a portion of it to stockholders. That's what's known as dividend. However, not all firms, particularly those in the technology sector, pay dividends, but stable corporations with little opportunity for growth, such as Shell, Wendy's, Walmart, and others, typically distribute their profits with their shareholders rather than reinvesting the money back into their business to develop quicker. As a result of their high competitiveness, corporations like Amazon never pay a dividend but instead reward their shareholders by keeping their stock prices high. To see how high a firm pays in dividends, just look up the stock price and dividend yield on Google. In this example, Apple pays 0.53% for each share of stock it purchases. Apple pays 88 cents for each stock. It's not a lot of money, but it may add to a lot of money if you hold enough stocks. However, Fed has slashed interest rates and began purchasing corporate bonds since the COVID-19 outbreak. As a result, stock prices soared. Some saw their payouts increase by more than double in a year, yet their dividend yield remained the same. Dividend yields on companies like Apple, for example, used to be 2.5%, which meant that for every $1,000 you invested in Apple, you would earn $2.50 in dividends. With that number, it doesn't appear to be as high as you can reach in real estate. When you invest in dividend-paying companies, you also profit from the stock's gain. For the past 10 years, Apple has not only paid dividends but also seen its stock price rise by an astounding 1,156%. Real estate investors can only dream of this. In addition, there are dividend-paying corporations that have been dubbed the king of dividends. There is a select group of 31 firms with the longest track record of doing so. These companies have weathered financial storms and challenging markets while still finding a way to grow their dividends throughout the years. Johnson & Johnson is one of the firms that investors can count on each year. It has increased dividends for 59 years in a row. This year, it pays $17 in dividends, which works out to 2.36% of its value. This implies that if you had $100,000 worth of Johnson & Johnson shares, you would get a dividend payment of $2,360 every year. Of course, you will also benefit when stock prices increase. My second favorite dividend stock is Coca-Cola, which provides an annual dividend yield of approximately 2.71%. It is a well-established corporation that does not appear to be going out of business in the foreseeable future. Do you honestly think that people will quit drinking Coca-Cola in the near future? I don't think so either. Lowe's, Southwest, and Pepsi are well-known companies with high dividend rates. In order to retire comfortably and live off of dividends, how much money need you put aside now? Before answering that question, we need to know how much money you spend each year. Let's say you earn $50,000 annually. If you want to make $50,000 a year, you should invest in dividend stocks worth $2 million. While there are dividend stocks that pay far more than the industry average of 2.5%, those firms have a higher level of risk than the king of dividends. You may rest easy knowing that these well-known corporations will still be around and continue to pay higher dividends even 10 years from now. However, when it comes to other firms that pay 6 or 7%, their stock prices might drop. In fact, one strategy for corporations to attract investors when they are having a bad financial year is to pay out large dividends to investors. Despite the greater dividend yield, you will lose money if the stock price continues to decrease. As a result, you should never put your money into a single firm simply because it provides a greater dividend yield. This is true even if the company is known for its long-term stability. The reason is that it has the same risk as any other corporation. Even while the concept of Coca-Cola going bankrupt seems unlikely given the company's long history dating back to the 19th century, anything may happen. As a result, never put all of your eggs in one basket. Real estate investments can produce a more significant return if you discover a good deal, such as 5 to 7% or even 10%. However, a large sum of money is required to break into the real estate market. Even if you're taking out a mortgage, you'll need to put money down first. After that, you'll have to spend weeks, if not months, searching the market for a decent offer. Furthermore, even if you do all of that well, real estate requires a certain amount of administration, which necessitates locating a talented individual. There's always going to be a problem, so you must fix it. However, there are well-known dividend stocks in which you may invest without going through any of the hassles when it comes to dividends. On the other hand, dividend-paying stocks can be purchased for as little as $100. While selling a property might be difficult, liquidating your shares is significantly simpler. I'm not a huge fan of dividend stocks because you can earn far more money by investing in growth businesses than you could possibly make by investing in dividend stocks. For example, Amazon's stock has increased by 2,500% in the previous 10 years. Facebook had a 780% increase in growth. Since 2012, Microsoft's revenue has increased by about 900%. Netflix has had 3,000% increase since its launch. Aside from dividend stocks, you may make a lot of more money by putting in the time and effort to identify a few fantastic tech stocks. Once you've amassed substantial wealth, you may begin investing a portion of it to generate ongoing income. However, before you start investing in the stock market, you must first learn the market's fundamentals. It is imperative that you know how to read financial accounts and analyze firms and understand what is going on in the background. So, invest now and your dream of having passive income while living your life at a tropical paradise somewhere in Southeast Asia might come into fruition sooner. Thanks for watching this episode. For more videos like this, subscribe to this channel and see you next time.